Hello guys, it's Julian, your quant, and today we are going to discuss about some investment strategies in crypto. So of course, as always, these are not financial advice. Do your own research, be super cautious when investing in crypto, and manage your risk properly, and only invest money you can afford to lose, right? So now let's move to some investment strategies, my view at least about investing in crypto. I think that as we see, we see thousands of investors every year. We discuss with them and we try to understand like their needs. And I think there is two profile in crypto. One profile is like the guy who has less than $100,000 in crypto, and the guy who has more than $100,000 in crypto invested. The first one should focus to only one ecosystem. I think the first trap you fall in is like following too many ecosystems. You will lose traction. You will lose like it's so hard to follow everything. So it's really hard. And I think that's why you should try to do your research. Think of like one, two, or three ecosystem that you really like and you really think that will have the most growth in the next cycle, and then focus in only one or at least or two, and try to really go deeper into the ecosystem. I always mention that my cousin had like a kind of like a big allocation of TIA coin because he really helped the team. He was super active in the Discord and everything. And I think that's something you want to target if you have less than $100,000 in crypto. The second thing is, of course, hunting airdrops. I think it was a big narrative in 2023. It will still be one in 2024. And there is still so many airdrops that will be released. The important thing with airdrops is like when people start to farm the airdrop, I think it's a bit too late. Or you could still make it and extract a few hundred, few $1,000s, but you will not get the big reward, I would say. The idea here is to try to really front run and anticipate the market and what would be the next thing. And that's, of course, that's something super hard, but that's something I think if you do your research quite hard on Twitter, you will find some big gems and it will really help you. So I think that's what you want to do. Then if you have more than $100,000, you want to have a spot portfolio really actively managed where you will try to rebalance, take some profit, re-enter and everything. That's the best way to go. Second thing I think you would like to do, you would have to do is like try to figure out some good venture capital deals and try to invest into them and try to do really small tickets. You want to do as many as possible, but of course keep like a high standard filter. And the third thing is like try to find automated investing solutions to have a part of your capital really working while you sleep somehow, having something that is out of your mind. And then on the right, you have like a folio, like let's say if you are kind of like defensive, you want to play quite slow in crypto, that could be your portfolio. I think so having some 1/3 ETH, 20% Solana. I'm a Solana maximalist, that's why. Still 20% Bitcoin, still some USDC, not to buy the dips, right? But to still have some stable coins, because I don't think we are in the big euphoric bull run phase. That's why you want to keep some. And then why not some BNB and Lido coin? I'm not a big fan of Lido, but why not? The other thing is like something that we always tell to our members is about Sharpe ratio. So the first thing is like, what if Bitcoin goes to $250,000? That's something you have to keep in mind. And it's how much you would have made compared to the risk you are taking. And that's something that is always so important for all your investment is like, what the risk you take compared to the return you get. And sometimes an investment where you make less return is way better compared to an investment where you make like 2 times or 3 times more return, just because you took the risk was so low that it was a better investment. And that's how you want to think about it. Another thing I like to add about that is about time. And I think the return investment you make is also, it's also a matter of like how much time did you spend into it. We see too many like members spending hours and hours on YouTube watching videos, and I think it's more like adding noise than really helping them making more returns on the market. And that's something you have to keep in mind. So always try to think about Sharpe ratio and try to make sure you don't not waste, but you don't spend time in things that will not really help you at the end of the day. So that was it. Hope you like this video. Feel free to drop a like, share it with your friend, and see you in another one.